Two men walk into the same dealership, same Tuesday, and drive out in the exact same car. Same price, same loan, same interest rate. 5 years later, their lives could not look more different. One is debt-free and grinning. The other lost the car, lost his job, and learned to hate it. Same car, same loan. One invisible number, never printed on the window sticker, decided which man you become. Before this video ends, I am handing you that number. Most people find it only when the repo truck arrives. Welcome back to Strategy State. I'm Sargon. Today we open up the car loan, the everyday deal that quietly wrecks millions of lives. Let's get into it. Right now, Americans owe $1.685 trillion on their cars. Not houses, cars. That is bigger than all the student debt in the country. The average new car payment just crossed $770 a month, and roughly 1 in 5 new buyers agreed to pay over $1,000 a month, for a thing that loses value the second you drive it home. Here's what nobody says. The loan itself isn't evil. Used right, it's a tool. Used wrong, it's a trap with leather seats. Picture two drivers, same salary, same city, same exact car. One takes a 4-year loan with money down and barely notices the payment. The other stretches it to 7 years, puts nothing down, and quietly drowns. Same vehicle, completely different lives. The difference was never the car. It was the situation they stood in the day they signed, and whether the numbers worked. Most people walk into a dealership thinking about one number, the monthly payment. That single mistake is where the whole thing falls apart. Dealerships know you think in monthly payments, so that's the only number they show you. It's just $380 a month. Sounds fine, right? But stretch the loan long enough, and almost anything sounds affordable. Some salespeople break it down to the day. It's only $24, cheaper than lunch. That's not a discount. That's a magic trick built to keep your eyes off the total. And the longer the loan, the deeper the hole. 7- and 8-year car loans used to be a joke. Now they're everywhere. At the start of this year, almost 23% of new car loans ran 7 years or longer, a record. Stretch a loan that far, and the car loses value faster than you pay it down. You owe more than it's worth for years. Interest piles up. And if life throws you a curveball, a layoff, a medical bill, you're trapped in a contract you can't escape. This is where it stops being about cars and starts being about your entire life falling apart. Stay with me. Last year, more than 1.7 million cars were repossessed in America. This year, projections cross 3 million, a level we haven't seen since the Great Recession. Behind every one of those numbers is a person who thought they had it handled. They didn't plan to fail. They just signed when the timing was wrong, and the math caught up with them. Slowly, then all at once. So let's talk about when you should absolutely not take a car loan. Because timing is everything here. The same loan that's harmless in one situation will quietly destroy you in another. These are the red flags. Red flag number 1. You have no emergency fund. If your account can't survive 3 months without a paycheck, a car payment is a loaded gun. The car doesn't care that you got laid off. The lender doesn't care that your kid got sick. The payment is due on the 1st, every month, no exceptions, and a missed payment is the first domino toward losing the car entirely. Red flag number 2. You're buying based on what you want to drive instead of what you can actually carry. Ego is the most expensive option on any car, and it never shows up on the sticker. It shows up later. Here's a number that should scare you. Nearly 30% of people trading in a car right now owe more on it than it's worth. The average amount they're underwater? over $7,000, an all-time high. So they roll that old debt into the new loan, financing $11,000 more than everyone else, and start the next car already drowning. That's how the trap repeats itself, over and over. Red flag number 3. Your credit is rough, and you're financing anyway. I know the car feels urgent, but subprime rates will eat you alive, and the math here isn't even close. Let me show you exactly what I mean. A borrower with great credit might land a rate around 4 or 5%. A borrower with poor credit? 16, 18, sometimes higher. On a $30,000 car over 6 years, that bad credit can cost $14,000 in interest alone, almost half the car again, handed to the bank for nothing. Same car, same lot. One person pays for it once, the other pays for it twice. Red flag number 4. You're stretching the term just to make the monthly number look smaller. This is the most common trap of all, and it feels responsible in the moment. It is the opposite of responsible. Stretching a 5-year loan to 7 might drop your payment $100 a month. Feels like a win. But you'll pay thousands more in interest, and you'll spend years underwater. People who roll negative equity into longer loans now average $916 a month, a record. They chased a smaller payment and ended up with a bigger one. That's the cruel joke at the center of this whole thing. Okay, that's the dark half, the situations where a car loan quietly ruins you. But I promised this video would flip, because there's another version of this story, and it's the one where the car actually makes your life better. Remember the 2 men from the start? The one who came out smiling didn't get lucky. He followed a handful of boring rules that the smiling drivers always seem to follow. He bought at the right time, in the right situation, with the right math. The car never owned him, he owned the car. And that difference is completely within your control. Here's exactly how he did it. Rule 1. Never walk into a dealership thinking in monthly payments. Walk in thinking in total cost, the full price, plus interest, plus insurance, plus gas, plus maintenance, for as long as you'll own it. The monthly payment is the bait. The total cost is the truth. The moment you anchor to the real number, every salesman's trick stops working, because you stopped playing the game they designed. You're now playing yours. There's a rule the wealthy quietly live by, and it's almost laughably simple. 20, 4, 10. Put 20% down. Finance for no more than 4 years, and keep every car-related cost, payment, insurance, gas, repairs, under 10% of your monthly income. Hit those 3 numbers, and you mathematically cannot end up underwater. Miss them, and you're rolling dice with your paycheck. That's the whole secret, hiding in plain sight. Now watch why that 20% down matters, because this is the part dealerships pray you never understand. A brand new car loses around 20% of its value in the first year, and up to 60% over 5 years. 60%. You're financing an asset that's dying in your driveway. The down payment isn't a formality. It's the airbag that keeps you from owing more than the car is worth the second you drive off the lot. And here's a quiet little fact the finance office won't volunteer. Interest on a car loan is front-loaded. In those first months, most of your payment is feeding the bank, not shrinking what you owe. That's why short loans and real down payments matter so much. They get you to actual ownership faster before the car loses the race to the loan. Time is the enemy here, and the dealer is selling you more of it. So, when does a car loan actually make your life better? When the car is a tool that earns or protects your income. You need it to get to work, to haul your kids, your gear, your livelihood. A reliable car that carries you to a paycheck is one of the best moves a working person can make, as long as the payment stays small enough that it never threatens the income it's supposed to protect. Here's the move almost nobody makes, and it's the smartest one on this entire list. Get pre-approved by your own bank or credit union before you ever set foot on the lot. Walk in already holding a rate. Now the dealer has to beat it to earn your business instead of inventing one to trap you. Credit unions often undercut everyone. That single phone call, made before you shop, can save you thousands. And buy the car for the life you actually have, not the one you're posting about. The most expensive mistake on any lot isn't a bad interest rate. It's buying more car than your life requires. The reliable sedan that costs half as much and gets you everywhere will do more for your future than the loaded truck you can barely cover. Boring cars build wealth. Flashy cars, far too often, quietly take it. Think about what that freed-up money could become. The difference between a smart car payment and a reckless one might be $300 a month. Invested instead, over the years you'd otherwise be drowning. That's tens of thousands of dollars, real wealth compounding quietly while your neighbor makes payments on a depreciating hunk of metal he secretly resents. Same income. Wildly different endings. The car was never the point. The decision was. And this is the mental shift that changes everything. Stop seeing a car as a way to feel rich, and start seeing it as a way to stay free. The person who buys modestly, pays it off fast, and keeps the car for 10 years isn't depriving themselves. They're buying something the flashy buyer never gets. Peace. No looming payment. No knot in the stomach on the first of the month. Just freedom on 4 wheels. Because that's what this really comes down to. Not horsepower, not badges, not the leather. Freedom. The driver who owns his car outright sleeps differently. He can lose a job and survive it. He can take a risk, change careers, walk away from a bad boss, because no lender owns a piece of his next move. The paid-off car in the driveway isn't just transportation, it's options. And options are everything. So let's tie the two stories together. The man who ended up hating his car didn't buy a bad car. He bought at a bad time, in a bad situation, with bad math, no cushion, too long a term, too much ego, too little down. The man who loved his made the same purchase look effortless, not because he earned more, but because he respected the numbers before he ever signed his name. And those numbers don't lie, even when everything around you is screaming to ignore them. The flashy ad, the impatient salesman, the friend with the new truck, the voice in your head whispering, "You deserve it." All of it goes quiet the second you run the real math. The car you can actually afford will never be the one they're pushing hardest. It'll be the one that's still in your driveway, paid off, years from now. Here's something almost no one realizes until it's far too late. The car is rarely what ruins someone. It's the timing. The exact same loan on the exact same car can be the smartest purchase of your life or the beginning of the worst 2 years of it, and the only thing that changed was the financial ground you were standing on the day you signed. That's the whole game, right there. So, before you sign anything, run the honest checklist. Do I have an emergency fund that survives without me? Can I put real money down? Is the term 4 years or less? Does everything, payment, gas, insurance, stay under 10% of what I make? If every answer is yes, congratulations. This car will probably bring you years of joy. If even one is no, the smartest move you'll ever make is to wait. And waiting is not losing. I know it feels like it. Everyone around you seems to be driving something newer, shinier, louder. But half of them are underwater, and the other half are one bad month from the repo lot. Patience is a superpower disguised as boredom. The driver who waits 6 months, saves a real down payment, and buys right will pass every one of them in the long run. Picture the version of you a few years out who did this correctly. The car is paid off. The title's in a drawer. That money that used to vanish every month is building something now: savings, freedom, a future. You drive a car you actually like, with zero dread attached to it. That person isn't richer than you by accident. They just made one decision, calmly, while everyone else was panicking at the dealership. Because in the end, a car loan is just a mirror. It reflects exactly how you handle money, pressure, and patience all at once. Handle it with discipline, and a car can carry you toward the life you want. Handle it with ego and impatience, and that same car becomes an anchor you'll resent every single mile. The machine doesn't decide which one it is. You do. Every time, before you sign. And that decision is closer than you think. It's not made on the lot, under the lights, with the salesman hovering. It's made now, quietly, at home, with a calculator and an honest look at your own life. By the time you walk in, the hard part should already be over. The right car, bought at the right time, doesn't feel like a risk. It feels like the easiest yes you'll ever sign. So, here's my challenge before I let you go. Don't shop for a car this week. Shop for your own numbers first. Build the cushion. Check the income math. Get the pre-approval. Decide what you can truly carry before any salesman gets a vote. Do that, and you'll never be one of the millions whose car gets taken away in a year. You'll be the other guy, the one who's smiling. 2 men, same car, same loan, same day. One ending in freedom, the other in a repo lot, and 2 years of resentment. Everything separating them came down to a single invisible number, the one that never appears on the window sticker, the one almost nobody bothers to calculate. You're about to hear it. And once you do, you'll never look at a car payment the same way again. Here it is. The number is 10. 10%. Keep everything your car costs you: the payment, the insurance, the gas, the repairs, under 10% of your monthly income, with 20% down and a loan no longer than 4 years, and you'll be the man who ends up smiling. Cross that line, and you slowly become the other one. That's the whole secret the dealership spends all day praying you never calculate. It was never about the car. It was about you, and the one number you refuse to ignore. Now look, I drive something so practical it's basically furniture, and I sleep like a baby, so clearly the system works. If this saved you from a decade of regret and a repo truck, do me one favor and hit subscribe, because the next video might just save your house. This is Sargon. Run your numbers, drive free. I'll see you in the next one.